All right, so this will be the phase 2 recap where we did 10 sessions of one and done with a little bit more size and um, the addition of a reset trade being allowed should the initial one and done trade be read. All in all, it was good. Definitely learned some things. A bit shorter in terms of the duration, so didn't see obviously necessarily the account like growth that would have been, again, more of an apples to apples comparison if I did it for a full 30 sessions. But it's one of those things where kind of the point of this is to find your emotional limits when it comes to size. Where's that threshold where, again, your emotions start kind of popping up and letting you know that it's like, again, the size is causing some sort of emotional response. So again, that's why I kept this one a little bit shorter, because 2 to 4 contracts, even again, market obviously conditions have kept things a little bit smaller for me anyway during this phase. So obviously nothing, when trading 1 to 2 contracts, that does nothing. And even when trading 4 contracts on a few of the days, didn't really do anything in terms of spiking the emotions, becoming undisciplined or anything like that. So yeah, it's one of those things where that's why kind of doing this. So yeah, phase 2 is now done. So going to quickly kind of go over that, pull up my account chart right here, do a little drawing on it. So see how that looks. Not bad for over that. Let's go with whatever that color of pink is. Okay, so you can see from phase 1, so this was 30 sessions and this is 10 sessions. So obviously during the phase 1 part, saw pretty good results from that. And then phase 2 also, again, saw decent for the duration. Good, again, growth, because I think, again, it's a third of the size. So a sample size is, again, quite a bit smaller. This one was with 1 to 2 contracts, and then this one was 2 to 4 contracts. And kind of how I would spell this out is like the maximum position size is 2 versus, again, the starter position is generally 1. And then same here, max size for 4 in a position with a max starter size of 2. But sometimes market conditions say, again, the risk is weird or something like that, and you have to compensate for wider risk or something. You do that through size. So it's one of those things where sometimes, well, I can take 2 contracts on the starter. If you're starting a little bit early, drop it down to 1. Or if the risk is also wide, you drop the size down to 1, just to, again, kind of compensate. It gives you a little bit more room to add into the position should it come up. Or you keep, again, control your risk and the potential damage that can be done in that position by just not going in, building up to a full size. So given market conditions, yeah, again, I'd probably say that there was more leaning towards the smaller side of things, and that's okay. I mean, that's just the market. You trade the market you have, not the market you want. So is what it is, and see what happens in phase 3. So again, we've done phase 1, and now we're done phase 2. So kind of just to go over that, you can see pretty good account growth here during phase 1, given the duration. So kind of saw a similar pattern in terms of like, so again, this one was 30, and this one was 10 sessions. And out of that 30, we had 20, if I'm remembering this correctly, 29 wins and 1 loss. And then in here, we had 9 wins and 1 loss, which was right here, which was actually much smaller. When again, it happens. So again, an undersized loss right there. So again, and then market conditions, again, saw a little stagnation there, maybe a little sideways movement, but all in all, it's like trade what you got. And again, this is where kind of the lesson from refining your entry points, like when you actually enter versus where it actually gets filled, and kind of really tweaking that to where, again, your half second to second difference, maybe even up to somewhere like 3 to 4 seconds difference, and how that impacts your position in terms of what you get entered at or filled at, and what that results in, especially when you're building a position. Because if you don't have that really dialed in, you can change your average pretty significantly in these positions to the point where it's like trade's not working all that well. You get a reaction. Maybe it's not, again, the reaction you're expecting, I mean, with zero follow through, but on that like reaction, if you had done a better job with your entries in terms of really nailing them, the loss would have been significantly less, maybe scratch, maybe slightly green. So it's like one of those things where it's like dialing that in, it actually does a lot. And it's one of those things you don't think like, okay, how much can that really skew things? When you actually sit down and do the math behind it, you'd be surprised at how much it skews it. And Pat kind of went through that demonstration with us, and it's, yeah, you'd be surprised. So, all right. So it's kind of how things went for phase 2. All good. Again, it's one of those things where like this was like a 96.5% hit rate. And this one was a 90% hit rate. But yeah, I remember it's a third of the size, so the sample set is a bit lower, but all in all, pretty good. Still doing better because, again, you're not ending up in these situations where it's like taking big, meaty losses, grinding up, taking big, meaty losses, like kind of thing, where it's just much more kind of smooth and consistent, which is exactly what we're looking for. So the other side of this is, again, the rules. So try this again. Phase 1 equals, in terms of rules, we were doing 1 to 2 contracts. No reset trades. Phase 2 is 2 to 4 contracts. 1 reset trade, with the caveat, obviously, that a red trade needed to be taken first. And for phase 3 now. So what we're going to do for this one is more, again, it's pretty simple. Just 3 to 5 contracts and the 1 reset trade on the caveat that a red trade was taken first. And that's basically it. For this one, I'm actually a little curious. I want to say in terms of duration, so this one was, like I said before, 30 sessions. This one was 10. I actually want to say let's do this one for 15. Kind of helps smooth out the data set a little bit more. Because it's, again, 10 may not be enough to really show anything or show enough. I mean, it could be. So actually, let's kind of back that off. We're going to, let's go with 10 to 15 potentially. So let's try, we're going to try for, again, continue to do the 10. If issues are encountered, bump it to 15. Because, yeah, it's one of those things where, for where I am, so I'm doing Pat built a program called SizeUp, and it's a very structured approach. And as you kind of progress in it through the different levels of it, you're allowed to take more size. Now, where I currently am, I'm actually allowed to take a bit more size than even this. This was just to help find, identify, and sort out issues. So I'm kind of trying to work my way methodically back up to that size where I should be. And it shouldn't really be all that long to get there. So it's one of those things where the 10 sessions is generally okay in terms of the data that gets returned off of it. It's just one of those things where having a little bit more granularity in it wouldn't necessarily hurt. But all in all, I still think it's a good structured approach. It's also one of those things, if you're not having issues at a particular level for a particular amount of size, there's no point in really extending that practice, because what are you ultimately gaining from that? I mean, granted, it's more repetitions, but it's also one of those things you're not finding the edge of that envelope where, again, things kind of, where that emotional trigger is when it comes to size. So again, it's not something, I don't want to necessarily belabor the process unnecessarily. So figured, again, if things go pretty normal with this size, it's one of those things where we just continue right along. And again, you can kind of see the pattern of how this is playing out. So it's 3 to 5. Again, it's one of those things. It's just one of those things where it's like, for phase 4, I might change that one a little bit. And maybe change the stepping a little bit more. So phase 4, kind of give you a preview. Maybe bump this up to 4. This one, bump that up to 7 for sizing. So again, it's one of those things where, again, can be free to, again, play with this a little bit just to kind of figure it out. But yeah, it's one of those things where, all in all, pretty good stuff. Phase 2 probably would, again, did the full duration of 30 days, would probably have a similar kind of hit rate and everything. Market has been a little squirrely over the past couple of weeks just because of what's kind of how it's reacting to different things going on. But at the same time, that shouldn't really, the strategy works, the trade plans work, so it shouldn't really move the needle all that much. I'm trying to think, like, if there's anything specifically that's happened other than, again, getting wider levels, maybe some wider risk on things. But when you're down in like the 1 to 2 contract range, yeah, it's hard to compensate for that because you're at such a small size. But once you get off of 1 to 2 contract, you can start kind of tweaking your sizing for these trades to accommodate that additional range or risk to level difference. So yeah, again, phase 2 all wrapped up, getting ready to do phase 3 starting tomorrow. And yeah, I think everything so far is going pretty smooth. I try to just really think in the past 2 weeks of any like weird issues that popped up. Again, surprisingly, no. Actually, not so surprising. I would say not surprisingly. I mean, like I said, this isn't my normal size for trading. But again, once we get, I would say, get past like phase 4, again, getting closer. But all in all, we'll see how the next one goes, see if anything happens, see if we need to extend it out, go any longer. But all in all, still feeling really good about this. This has been a good exercise. It's one of those things where if you're struggling, it's like, this is what kind of this process is to sort yourself out. And you just, again, put in the time and the effort, be real methodical, really obey the rules, and you'll notice things, especially if you're reviewing your trades every single day. But all in all, like I said, good stuff. On to phase 3. And hopefully, again, you got something from this. I know maybe not the most riveting of videos, but yeah, good progress. And we will see exactly where we go from here. And that's really all I got for this one. So we'll catch you tomorrow for the next. Have a good one.